MBA or consulting doesn't necessarily teach you anything that is required for you to evaluate startups or build relationships with founders.
How tough has been the transition into a VC journey?
As a founder, you are able to see impact on a daily basis. But in the VC, nothing changes in a month or even in a quarter a lot of times.
Then you realize you just focus on the input side where you keep meeting people, keep meeting startups, and investment will happen eventually.
How many founders would you have spoken to in the last 7 years?
Anywhere from 1,500 to 1,800, I would say.
The number would be 1,000 plus as well.
What's been your biggest unlearning?
When you spend enough time, you realize it's more of a people flow business than deal flow business.
It is more a thinking oriented job than a hardcore day-to-day execution kind of a job.
But when you decide you're not made for it?
For me, this is endgame. Hi, this is Siddharth Aluwalia, your host at Neon Show and managing partner of Neon Fund, a fund that invests in the best of enterprise software companies starting from India. I have today two of my oldest friends in venture capital who I counted upon when I started my journey as a VC back in 2019. I have Gaurav with me from Prime Ventures and Naman from Stellaris. You both come from either founder or founding backgrounds. How tough has been the transition into a VC journey?
So when I joined initially, I joined with a very open mind. And I thought you're doing the same thing. You're building startups and you evaluate startups and invest in them. But one big difference that I found initially was the speed at which things move in VC and in startups. When you're building a startup, every day is a new challenge. You launch a new product, you launch a new category, something is breaking, something is working well. So every day you are in you have something new to do and whereas in VC, when I joined for the first 3-4 months, we didn't do any deal. I was like, is this how VC operates? Right. So that was where I think it took some time to get used to how the investing world operates. It's not that we're not looking at startups. It's just that in a fund like ours, we invest in 6 startups a year. So just getting used to that pace was, I think, a bit of a change for me. Right. And then you realize you just focus on the input side where you keep meeting people, keep meeting startups, and investment will happen eventually. So that was one big change in learning for me.
Yeah, Naman, how was it for you being a founder and then?
So, I've started 2 companies across 5 years before I transitioned into the VC role. And I would agree with Gaurav that it is a very hard, more because of the shift in mindset that is required. As a founder, you are able to see impact on a daily basis, on a weekly basis. There are things to do, and of course, a lot of things are on fire that you are trying to settle down. But in the VC, nothing changes in a month or even in a quarter a lot of times. So getting used to that pace, is quite difficult. In a startup, you work 6 or 7 days a week. In VCs, when I saw weekend job for the first time, I was like, what's happening? Why is nobody working on weekends? So that mindset shift is required to be more patient. It is more a thinking oriented job than a hardcore day-to-day execution kind of a job. So settling in takes a bit of a time. But I think one thing that I really like is that, so if you have been a founder or an operator before, you are able to relate with the founders quite a lot. So ability to empathize with the founders and build that instant connect with the founders is very, very high, because founders also see you that you have been on the other side of the table. You know what it is like, and hence and you can empathize with them. So in that sense, it is also easy, but it is hard from the mindset shift perspective.
I mean, to your point, Sid, I think it should not come out that VCs don't work. I mean, when there is real activity, we do work, and everybody works, right? I mean, so when there's real activity, I mean, we were recently on an offsite, and there's a hot deal that we're chasing, and during the offsite, on one side I was making presentation for annual plan, and the other side we're having pitch meetings, right? So when there's real activity, of course, it's there, but otherwise, it is far, you can control the pace compared to what it would be in a startup when you're in an operating role or a founding role.
You're not chasing a target.
Yeah, you're not chasing a target. Yeah.
Among the ecosystem that I have observed, since I started a company in 2012, I think you also started during the same time and you joined as a founding member during the same time. The traditional set of VC teams were usually made up of people who were from Ivy League or from, then they did consulting and then joined VC. So I was never able to relate to them, neither as a founder nor as a VC today. Right? How was that ecosystem shift for you both?
Yeah, I think so. When I joined VC at that time, I was probably one of those few odd one outs. I am not from a consulting background. I don't even have an MBA. So getting into senior
I think
VC
you're
role,
the only MBA on table.
Yeah, so that was a bit odd, but I think it was a lot more easy to transition into a VC role if you have been an operator or founder before. As I was telling, that it is easy to establish that instant connect and relationship with the founder. So I think over time, people in the industry have realized that MBA or consulting doesn't necessarily teach you anything that is required for you to evaluate the startups or build relationship with the founders. Of course, it gives you formal education about businesses, but on-ground education is equally and maybe more important. I am biased towards being an operator or a founder, so I think it is more important to understand nuances of the business and build relationship with founders.
Gaurav can tell us how MBA made him a better VC.
I think the only benefit I get of MBA is the network that I built, and a lot of people would agree with that. But yeah, I mean, moving from initially when I joined, yeah, same story, like very few people with operating background. But then back then when I joined 2018, there were very few startups which had done well or where people could exit and like join a VC. And VC ecosystem also relatively small than what it is today. So I would agree with Naman that just the ability to connect with the founders is there because you've been through the same grind. You know what it takes to like hit a monthly or quarterly or yearly target, what it takes to build a team, what it takes to hire a team, right? So that connection is there right from the beginning. And second thing, you also understand, which comes when you're investing in startups. When you start investing, is that it's very easy to build models on a Excel sheet and like write stories and vision on slides, but converting that into like actual outcome, there is like a lot of hard work that goes into that, right? So that you start appreciating when you have been on the other side, right? Because we would also submit our monthly and quarterly plans to our VCs, and those would be audacious, ambitious targets. But when you have to hit that, that's when you realize that what it takes to like hit the target. And a lot of times we see founders who say, okay, we'll grow like 5x in a year. And it looks very beautiful in an Excel model, right? You're going like 15%, 20% month over month. You're adding more people, revenue is growing, retention is happening, all of that, right? But then when you like have been on the other side, you know that what is there on the Excel sheet, like translating that into like actual numbers and actual results. There's a lot that goes in between that, right? So that also you're able to appreciate a lot more, right? And you don't ask founders for like, why you're not growing 10x in like 3 months. Because you understand that in some cases, there'll be like some groundwork that needs to be done before the scaling up can start.
I think if you've been an operator before, pitch to a VC, and then if you're a VC, you will not believe in any projection at all.
Yeah. So normally, I discount all numbers by at least 20-30%, whatever. Like.
I discount every number. Because I know that first 5 years of the journey will...
Yeah, you don't know what
if you're able to survive,
yes,
right, no number will be hitting the target in 99% of the cases. Right? I think
either you grossly underestimate or you overestimate.
Yeah.
So there is no linear path. Like Excel is all built on linear models, right?
Yes. I mean, you can do some exponential growth, but like what it'll take for that to happen on ground.
But I think the mindset is changing. I think more and more VCs are now open to hire people with ex-founder background or ex-operating background.
Or I think other thing is also happening. A lot of folks who are consulting or MBA who joined VCs directly after without any operating background or being a founder, they are now leaving companies to start becoming founders or leaving funds to becoming founders.
Yeah, that's there always.
We have two portfolio companies where the founders have done exceptionally well. They were VCs earlier, like Rapid Claims, where one of the founders is from Together Fund, other is from Matrix, right? And they were itching to build. And the other is from Viz Commerce, Divyanshu. Okay, he was part of Bessemer earlier. I think so. So VC might add, I don't know, right? Might add some edge to founders. What do you think about it? Being a VC, would you consider a founder differently if they have been VCs in the past?
No, I would not. I mean, to be very honest, when you look at founders, you just try to understand what they're building, what is the story, what is the motivation. So, I mean, being a VC does give you some advantage in terms of you have a more broader perspective on things because you've seen like multiple startups, right, and multiple sectors, how they evolve. So that is one advantage that you have, which an operator may not have because they would have normally operated in a single industry or a single function. So that is one advantage that you have, right? But I don't think that is big enough advantage for you to like build things differently or have an edge over somebody who's coming from an operating background.
In fact, I think it is more of a disadvantage because your execution capabilities are, have rusted.
Yes.
Under question.
Right. Because you haven't executed on a day-to-day basis for a very long time.
Yeah.
Like building team leadership, all of those things. Typically, you don't get to experience as a VC. Like VC is still more of an IC kind of a role. So
Yeah.
There's no natural edge that VCs carry in
No, I think VCs are in business of pattern matching because I think pattern matching is a low cognitive exercise, right? It gives you the easy answer, at least on paper. So one thing that I've observed, which might be a complete bias, is both in case of Rapid Claims and WizCommerce, the founders were like hardcore operators before, not founders. And in WizCommerce, the founder was a ex-founder before they jumped into VC to learn what VC is like and then shift again to a founder.
Yeah, and that could be a good journey, right? You've been an operator, so you know how things operate on that side, how to build businesses, and then you go to a VC, like what story will sell to the VC. So, how can I ride on this quick commerce wave and quickly raise money?
You have the execution muscle from your operating experience, and then you have a storytelling muscle or at least the broader sectoral level story.
Yeah, so you can anticipate what questions will be asked and you can prepare for that. Whether you will do that or not is a different thing, but yeah.
So Gaurav, how many founders would you have spoken to in the last 7 years?
In 7 years, I would say, in terms of teams, anywhere from 1,500 to 1,800, I would say.
But do you measure them?
Yeah, we do keep a track of the pipeline. So from that.
But for yourself also, that how many of those, let's say Prime would receive 3,000 or 4,000 companies every year. So out of that, how many companies did you speak to individually every year?
So now we have a larger team. Earlier it was just 3 partners and me. So I ended up speaking to every company that we're looking at. Now, of course, we have a larger team. So it gets distributed. But yeah, that would be the rough number, I would say.
52.
In a year, about anywhere, close to 200 to 50 startups in a year.
Okay, so overall 1,800 companies in the last. What about you now?
Yeah, I think I haven't not counted how many companies I've met, but I'm pretty sure the number would be 1,000 plus as well.
Yeah.
Because we typically end up meeting 6 to 8 companies or sometimes even more in a week. Translates to 150 to 200 plus companies in a year, and I think in last 6 years probably definitely 1,000 plus companies and might have evaluated probably 100 odd startups out of those 1,000 a lot more deeply in last 6 years.
And how many companies you would have been part of the team that led the round out of these?
So as I said, before 2022, between 2018 to 2022, I was part of all the deals, right? Because since then, as the team grew, I think every year I end up doing on an average 1. We have a fund, we do 6 deals a year. So 1.
So I assume roughly 10 to 15 deals that you would have been part of.
Yeah, in terms of being part of deals, more than 20 for sure.
20. What about you?
That number is 10. We typically do one individual gets to do 1 to 2 deals a year. So have been part of 10 investments so far in last 6 years.
I have done 59.
59? Oh, this includes your angel?
Yeah, some pre-fund check, but pre-fund was only a very small, 10 companies. But if you consider fund 1, fund 2, fund 3, then
in 4 years you have done
2019 to 20 was pre-fund, 10 deals, and 21 to 22 till now 49 deals.
So you are a veteran now. I think we should seek guidance from you.
that.
But how do you do?
I think what might be my strength and weaknesses, my bias for action is very, very high.
Yeah, that I've seen.
So if now since the last 2 funds, we have a proper IC of 4 to 5 members, right? And every company has to be a IC majority vote kind of. In most of the cases, there are some exceptions also.
Because you have now the place will slow down because you have to convince other people as well.
Yeah. and this has been for the last 33 deals. Okay. There has been an investment committee.
Oh wow.
Nice.
Yeah. But I think the bias for action, overall the culture has been built for high. Let's say if we recently we invested in 2 companies or gave term sheet to 2 companies, and the last 1 month we would have done 3. But before that 5 months, we didn't do anything.
Oh. How did you manage in those 5 months without doing
So I was focused on the race, so that gave me
So, okay.
some dopamine.
Yeah, that is.
but yeah, our thesis is like do actively, and in this fund we are taking like 10 to 15% positions for 1 to 1.5 mil kind of checks. So
And what is the typical timeline from like first meeting till you give them a term sheet, like a yes or no decision?
in many cases it is in 1 week. Like we do entire DD within 1 week.
Oh wow, that is impressive.
Yeah, and in these cases we thought that they are competitive deals,
Uh-huh.
so needed to move fast.
Yeah, I mean, I remember during 2021, and deals were so competitive. We used to meet founders on Thursday, and we said, okay, we'll set up next meeting on Friday or over the weekend. Over weekend, we'll get a mail. Thank you, guys. Our deal is done. So that was 2021.
Thankfully, we have never regretted because of speed of action. I think the 4-5 companies that shut down from Neon portfolio overall were only because they couldn't achieve product market fit. So I would say that even if we took 1 month on them, the answer would have been almost the same.
Yeah. So that I agree. I mean, whatever deals that you look at, you tend to have some like inclination in the first 1 week, right?
Yeah.
And after that, you're just trying to revalidate and reinforce your bias, whether it is yes or no. The next couple of weeks will just go in reinforcing that. So yeah, I agree. I mean, whatever you decide in the first week is eventually what happens.
Yeah. Or unless you until like in a couple of cases, let's say it was a yes from the IC, and then we said like before saying a yes to the company, we'll do a DD. And in case of DD, the first few design partners that we met were also advisors or shareholders in the company. so that was a big alarm that went off.
Yeah.
But usually, at least in our case, we have tried to move quickly, and I think speed is today VC is very competitive. Like unlike when I started 6-7 years ago, it like as a VC fund trying to make conviction was very different. Today it's not the case.
Yeah.
It's still like it is still better as compared to 2021. But yeah, I think 10 years back, I think when we started a company, I think that time people used to take more than a month to diligence. You know, they have all the time.
Some of my ICs went on for 6 months. One IC is done, next IC is after 4 months. And even a small company, the data gathering never stopped by.
I think when we started in 2015-16, that time, I think investors evaluating us for more than a month was a norm. I think now, if you are evaluating for more than a month, you are
yes.
Either
if the company is really good, then it would be gone, and you would know that if you are still evaluating after the month, then they are not able to raise from anywhere.
True, that is a question that we at times ask. If the deal is taking too long from our end, we say, yeah, it's been like 4 weeks and we are still not in a decision, but the company is also doesn't have a term sheet. Is that a signal we should look at? So, but yeah.
Recently, what happened is a company came to us on Friday, a Bay Area company. By Sunday, we had to take it to IC because founder said that this is like Monday we gave a term sheet, and by Wednesday we obviously term sheet have certain time, right? By Wednesday they said that we have a term sheet from a US tier 1 kind of a fund. So so that's the speed of execution, right? At least.
But do you guys get influenced if startup says that we have some term sheet? Of course, we move fast, but like in terms of decision bias.
So we follow a principle that if you have a term sheet, we'll not replace. Either you get both of us, right? Because if you can replace me with somebody else, then I'm also replaceable then.
But to answer your question, I think we also like try to build independent conviction and not sway our decision making because of somebody else's conviction. I think you can't borrow conviction in this business.
And the thing is, in VC as a founder, because you are seeing pulse of day to day of a company, you are able to see direction whether it's going right or not, and you always know that if these things could happen. As an investor, it takes a lot amount of time, right? A company that you would have bagged 4-5 years ago, you would still not know whether it will break out or not.
Yeah.
So the feedback loops are extremely long, especially at earlier stages.
Yeah, I mean the real feedback loop is 10-year long, like 7-year long. But yeah, I mean at least some early signs you start seeing in 3-4 years. That was one big. I mean the first question that you had, that was one big learning for me as well, right? You invest in a startup and then for the first year, like nothing moves. I mean they're still like building team, and then you're like, when you like get to know whether this is a success or
I
not.
think the downstream effect of that is that you can't be super experimentative as you can be as a founder. That you can try a lot of things, figure out what's working, what's not working, and accordingly change your strategy or direction. As a VC, since the feedback loop is longer, you have to be more thoughtful in your approach. So more than like being executed, like on execution spree, trying too many things, learning, because the mistakes are costly. You're
Yes.
actually losing money on those
So more than,
experimentation.
I would say still, money is one part, but now you have committed your time and all of your entire
Right.
resources to one company for the next 10 years. So that's why we are extremely careful
Right.
while saying yes, that, hey man, even if it goes down, then that's okay. But for the next 10 years, I'm going to have weekly calls with these.
Yeah.
Yeah.
founders.
And
Yes.
more than the companies, even your strategy of investing, your
Everything
frameworks of
gets
investing,
influenced.
all of that needs to be a lot more thoughtful than only action oriented, because like the feedback loops are longer,
Yes.
right? So you can't rely on taking a lot of actions and then learning from the results and then changing your strategy accordingly. You don't have that luxury as a VC.
And what's been your biggest unlearning in the last 6-7 years?
Unlearning. So I think I'm trying to unlearn pattern matching actually. It's very
That's what-
counterintuitive.
It's very easy to do
It's
pattern
very
matching.
counterintuitive. I think when I started my VC journey, at least a lot of people talk about VC is all about pattern matching. But if you see all the great companies that have been built, they have been like antithesis of pattern matching. They are the first of their kind. And in a sense, I've started to believe that VC is more about pattern breaking as compared to pattern matching.
I would say it's neither pattern matching or pattern breaking, but what it is if you start going into pattern recognition, you are trying to offload the cognitive load, right? Saying that these two founders who were VCs, they worked out, so now let me look for another founder that has been VC. So it's an easy answer.
Yeah, and I think majority of alphas, all the new really outsized outcomes typically are first of their kinds. So you have to be unconventional and non-consensus in your
Or
approach.
you can't try forcing non-convention, that this guy looks completely unconventional.
So you can't be
That
completely do that.
17-year-old or 16-year-old
Right.
starting a founder, drop
Yeah.
10th class.
Right. But that's where I think pattern matching is still relatively easier. But thinking about where can the pattern be break,
Yeah.
can break, that is a lot more difficult to judge. And like honing that skill of pattern breaking, here, yahan pe we can really break the pattern, and this company can be different from others. Identifying that 1 out of 100 who can be different but still not create anything is a lot more harder. But at least that is the thing that I'm trying to unlearn, that don't try to figure out what pattern is working. You need to figure out where can you really break the pattern and make it really different and large.
Yeah.
What's your unlearning?
So that is definitely one of it. The other for me is, I mean, coming from an operating background, when like building things from 0 to 1, you're always very optimistic. Macha denge, fold denge, sorry for using Hindi words, but we'll win over everything. You're very optimistic in everything that you do. As VCs, of course, you have to be optimistic, but with some amount of caution. You have to be cautiously optimistic. Right? You can't be like bullish and optimistic on everything, and everything that the founder says, you can't believe that. So that is one thing that I had to like build in. The second thing was, I wouldn't say more unlearning, but something that a bit of unlearning, a new thing that happened was when you become a VC initially, right? And when you have like built things in the past, so you are very enamored by cool ideas and like cool innovation. Will that translate into a big outcome? Is something where I think that muscle you'll have to build, right? Because at the end of the day, whatever we do, right, we invest in startups, cool ideas, new innovation. We are money managers, right? You have to like return money at the end of the day. So if you bring in that lens that you're money managers and investing in like startups is a means to that end, and of course you have to find the best ones. So that was one big, I think, takeaway for me as well. That don't get too sold on just cool ideas, but also think about the financial returns that you can make out of that, because that is what will ensure that you are in the game for long.
Yeah. On your point, right? Matching patterns. I think it's very also easy to fall into conclusion. Let's say somebody like on conclusion on writings. For example, Fred Wilson wrote this that try to find founders who are like this.
Yeah.
Like so these points become talking points, right? And then you are trying to retrofit into some existing behavior, a new set of team. So I think read everything, but don't believe anything.
I think you can't go with a preconceived framework that, these are the checklists or these are the checkbox, let's say a consumer founder should have, or these are the checkbox a SaaS founder should have. I think if you see most of the founders who have become big, all of them looks like a different personality
Yes.
with different strengths, weaknesses. You can't put them under one cookie cutter kind of a approach.
And the other thing with like pattern matching is there's a lot of survivorship bias in that, right? Because you only see the ones which are successful, right? And that's what you try to match patterns with. Whereas there'll be like 100 more companies trying to follow the same pattern which like didn't do well, right? You and I can relate. Back in the day, hyperlocal was the big thing, right? And I was with Housejoy, you were building Dormant, right? So, and today there are successful companies built out of that, right? So you can't match a pattern to say, okay, like home services was a need. If somebody else comes up with a 30-minute home service, it should work, right? Because like the way companies are built, the way founders operate, there are like a lot of nuances into that, right? So while patterns, you can use pattern matching to some extent, but like you'll have to go beyond that to actually build conviction.
I think in 2015, 16, 17, I think on-demand was the really hot thing. And of course, a lot of them didn't work out. So people had a negative pattern matching around it. Now it is rebranded as quick commerce. These days. It's effectively on demand.
On demand, yeah.
But now it is what it is, probably
unfortunately, in both these cases, the winners were clearly visible and then the company started emerging. Whereas in both these cases, it's a winner takes all market.
Yeah.
Right. But I think people just fall into a trap of if there has been one Zepto, there will be many Zeptos. Or there was one urban company at that point in time, there will be many of those. I think mistake on both the part of founder and the VCs without thinking.
There's a lot of like Uber for X kind of story.
Dex used to contain Uber for X.
Uber for X. Yeah. We saw that across like verticals from hospitality, travel, education, everywhere.
And during your 6 years and your 7 years, right? How have you seen overall ecosystem evolve? If you have to think of it in terms of mental models or summaries.
I think one thing that I've clearly observed is the founder quality and maturity has gone up at least by order of magnitude, if not more. I think when I started, I think we were quite immature in thinking about how a business should be run, kind of inciting that needs to be there. I think today, if we talk to founders, at least it blows my mind that how mature a lot of folks are. So overall, I think ecosystem is matured in terms of a lot of seasoned founders, experienced founders coming up. In last like 6, maybe 8, 10 years, there were no large startups to look up to. So then there was a lot of fresh blood, people right out of college or from different kind of an experience who are coming and starting up. Now we already have successes. So a lot of existing founders, like people coming from existing startups who are coming up and starting up. So that is one change that I have seen in last 6, 7 years, that the founder quality has gone like significantly higher.
Yeah.
But has it also translated into terms of outcome quality right now? Or it's yet to be
It will translate 10 years down the line, because that's what it is. So I think the way it will translate is probably both the size of the outcome. I think probably 6, 7 years back, people were thinking, okay, 1 billion outcome is possible. Now all of us are starting to think that, okay, 2 to 5 billion outcomes are also possible in 10 years from now. So it is very difficult to see it today because, as we said, the cycles are long. But pretty sure that in 10 years, we'll see much larger outcomes than what we used to see.
And what's the metric that you are measuring the founder quality and the other things that you mentioned?
So essentially you're asking like how do we evaluate founders or how do we mention founders?
Just the metrics, right? You would have some metrics if you have to put something on it that 7 years back and today the founder quality is changed by X. So what
Right.
are
So we
those
have
X?
certain framework like the way, so like one that we index really highly on is strategic thinking. So that has significantly
What do you mean
moved
by
up.
it?
So how are you able to think both in terms of near term and long term? Are you able to take decisions depending on how the market and competition evolves? So I think being able to zoom in and zoom out across different times, that is one part of a strategic thinking. How should you react according to the market? Uh, some kind of a second order thinking is what I'm alluding to. That has significantly gone up because a lot of people are coming from being on those roles which required some kind of a strategy building when you're leading. Let's say when you're a founding team member of an existing startup, or when you are leading a big enough initiative for a larger company, larger startup, not necessarily MNC, then you have been on those strategy roles day in and day out, and you are able to bring that muscle right when you're starting up on your own, as compared to working in a corporate where you don't get as much direct experience to strategic thinking. The second thing that we look at is your learning agility. Again, like people who have worked in startups in the past, I think they are very, very agile in their execution, in their thinking, in their experimentation. That like number of people who are like who have that learning agility has also gone up. Or the people who are starting up who have been in that environment in their past roles.
Gaurav, what's been your
So,
observation?
I would agree that founder quality definitely has gone up. The other thing which has also happened is that earlier in the day, right, back in 2015, 16, or even when I joined VC in 2018, the equation was heavily biased in favor of investors and VCs. And, because one, there were few VCs, and second, people were still, it was still early days of the startup ecosystem. So you had founders who were still like building, figuring out things, didn't know how to like raise, how to story tell, or like what would sail with a VC. Now, for good, it has changed. At least I'm seeing that a lot more now in favor of founders, right? Where founders can decide who to raise from, what terms to raise from, right? Which is a good thing that has happened. As the founder, if you're starting up, you have multiple choices, right, and multiple options where you can go to. So that is definitely the other thing that I have seen, which has changed. The other angle is, which is somewhat related to founder qualities in terms of the audacity that you have now to build large outcomes and compete at global scale. That I think founders think from day zero. We invest a lot in enterprise SaaS like you, and we see a lot more founders saying, okay, I will go and compete in the US with the best of the US companies. Right, and that has also come from the experience of like building and working in startups which have done that in the past, whether it is an Indian startup or a Valley startup. So that is the other thing, which we're a lot more confident, audacious founders is what we see now.
I think not just in SaaS. I think even a lot of consumer founders are now thinking of building globally and building in US. So I think 7 years back nobody was thinking about building a consumer company globally. Now we see a lot of founders who are trying to build consumer solutions at a global level.
My observation has been the courage in founders has become 10x. For example, the way they are hiring right now, for example, the quality of talent, even expensive, they are able to bring on, let's say, between day 0 and day 10. The way they are able to build cross-border teams starting like from year 1. I think that is fantastic. I would say it's equal to or even some of the better, like, because we invest between both India and the US corridor, and some of the Indian founders that we invested in are based in US. Our founders here who are building both cross-border teams, their execution is better than some of the parallel American companies that we have seen. It's a matter of time that we'll see the results happening, but the courage is huge.
Yeah.
I think some of the factors would also be leading to that courage is more examples, more global accessibility,
Yes.
and more amount of capital at their disposal.
Yeah. And the other thing which I also see which has happened is, I remember back like 10, 12 years when I decided to join a startup, there are a lot of questions like, why are you leaving like a good job out of B school and joining a startup? Those questions don't come like now, right? People are okay with their parents are okay with their kids joining startups and like doing startups. So that is a big cultural change, which I think also plays to the fact that now people are a lot more confident, that they know that this is risky, but then you can still have a great outcome here if it works out. All right, so that gives that confidence.
Yeah. If you were to start your journey in VC today, Gaurav, let's say, what would you do differently?
So one thing when it is VC, people, it is a deal flow business, right? That's how it looks from outside. But when you spend enough time, you realize it's more of a people flow business than deal flow business. That is one thing that I would like do differently. Instead of chasing deals, like you of course chase deals because that's part of the day-to-day job, but build meaningful connections, not only with VCs, but with operators, with people working in other companies, right? Just build your own network, right? Which kind of pays back in the long run, right? If you're playing the long game in the VC, that is the most important part, right? And it took me Amit had mentioned, he's my mentor, he mentioned that, focus on people flow, but it's not very intuitive, right? Because day in, day out, looking at the next best deal, the next best founder. So invest in people flow, build your network, build your connections, right? So that is one thing that I would definitely do differently now.
Yeah, I think if I were to start today, I would probably index a lot more on building an independent thinking and independent learning as well. Like a lot of time you try to borrow learnings from, by hearing what other investors have done or, through somebody else's experience. But I think Indian VC ecosystem is such a nascent stage that the data points are very, very small to really borrow your learnings. There are not enough data points to actually match patterns. So I think indexing very heavily on your own independent learning and independent thinking is where you would be able to generate that alpha. Like you need fresh thinking and not somebody else's learning or thinking. Like that may end up you making some mistakes as well. But I think that is where your chance to really differentiate yourself. If you learn from somebody else's and follow their learning and their pattern, then you're not really trying to differentiate yourself and create a disproportionate outcome.
Yeah, so my learning is like differentiate yourself from day zero.
Exactly, that's what.
Yeah, so the better differentiated you are in the ecosystem or even outside the ecosystem, the better the founders will be able to associate yourself with. And
yeah, a related point to that is right. While differentiate yourself, create an independent brand, right? And people may come for a Prime or a Neon or a Stellaris, but you would want people to come chasing, okay, Siddharth Ahluwalia, I want to raise from Siddharth Ahluwalia, I want to raise from Naman, right? So that also kind of pays off a lot in the long run, right? Which is somewhat like not exactly like differentiating yourself, but creating your independent identity, right, along with the firm. That also helps.
I think that can only be made when enough numbers of founders start speaking about you in the same language.
Yes.
Yeah.
And that has to be built by hard work and organic thing. There's no shortcut to that. To make conversation more interesting, I'll start rapid fire. So Gaurav, I'll start with you. One company that became big that you passed.
Bharat Pay.
I think you are really pressing where it hurts. And I'm sure the number is not one, it is more than that. But I look at consumer, so there have been a couple of companies that have become large that we passed. I think Sleep Company is one.
Which one?
Sleep Company, Snitch. Both of these brands we looked many years ago. They've become large now.
Yeah, if you ask anyone, there'll be like more than one companies, but I just picked one. They're like, I can name at least 10. One I learned just on the table.
Nobody wants to name more number of companies in this bucket.
Yeah. I said one I learned just now while before this podcast when you're talking about some other company.
Yeah. So Gaurav, one company that you were very bullish on, you pressed the partnership, but today you regret not investing.
Say that is Winzo. So it was like first few months of
I am Calcutta guys, right?
Yeah, he's like, so Pawan is a very good friend. Like we're batchmates at IMC, and then we also worked together at Zorooms in Hostel. So I knew him really well. what he was doing was not yet done before, right? So that's where the pattern matching thing could come in. That he was a consultant, he worked in operating roles. This is pure gaming, like. But I knew him really well to say that he was ambitious, go-getter, matlab macha denge, ford denge kind of mindset, right? But back in the day, RMG was relatively new. Regulations were not very clear around RMG, right? And that's the reason we said we'll not take a bet right now. But that is one where, knowing the founder, I knew that something great would happen here. So I regret that.
I think for me, that name is Pixis.
Wow, you saw Pixis.
Yeah. So many years back, I've been coming from the startup background. So we have done the digital marketing. We understand that problems, what comes, while marketing. So when we met that company, I really, resonated with the problem and really wanted to do it. But of course, couldn't get it. I think for me that time, when we evaluated Pixis, I was probably in my second month as a VC. So it was the first company that I diligenced, and I was bullish on that right from day zero. So it is very hard to understand whether it is your optimism coming from as a founder or do you genuinely believe in the problem and the team.
Yeah, I think the biggest learning for me from that was that index a lot more on founders, and business models will change. Market of course will not change, but business model will change. Things will evolve. And then if you have conviction, go all in.
I think that the other tool that can be used is I'm willing to put my own money, whatever. And similarly, where he was not able to convince, he says it publicly, was delivery. But Axel didn't invest, I think, in delivery, but he put his own personal money, 10 lakhs, and that became 1000x.
1000x? Let me meet Abhishek again. Let me have recalibration of his net worth. But he has told about both these stories that I said I'll quit Axel and put my own money if you guys don't invest. So then finally he said, okay, we'll put some money here. And delivery, he mentioned that he had to break his FT to invest there. So we can't do that. I don't know if...
Yeah, so
nobody is allowed to do that. But if you are saying that this is one company I'm willing to put my personal money if it helps to convince their case. Because you can't be saying for every second.
Now I can say that if I'm convinced, मैं छोड़ के चले जाऊंगा if you don't do it.
But that tool is only available for once or twice.
Can't do it again. True.
So if you are an investor in early days of Indian startup ecosystem, which startup would you have loved to invest in?
Yeah, this is... I would say, if you look at it in hindsight, only look at successful companies. So I'll name one which is very successful, which is Freshworks. I would have loved to invest in. And the other, which I found the product very useful, but company of course didn't do well, but I would invested, was Zoomcar. I'd used Zoomcar a lot, right? And loved their model. So maybe one where I would have invested in, not a great outcome, but still would have invested in.
No.
I think as an investor, it is very easy to look back in hindsight and decide which one should have invested in, because you already know the outcome and the answer. For me, that answer would be Zomato. I think probably one of the highest value company, also listed, publicly listed. So I think it's a very easy answer for me. The company that has generated maximum return. I think as an investor, looking hindsight and figuring out what the answer should be is very easy.
What about you?
A couple of companies like Icertis, HighRadius, because I think Indian ecosystem is still indexing very high on Freshworks kind of a model in B2B software, right? So I would have my learnings to be more diversified.
Okay.
Right. And those founders, I think, don't come out much and speak.
Yeah.
So, and one investor from India and one globally that you admire the most?
Globally, I would say not a VC per se, but Warren Buffett. I follow him and admire him a lot. If I have to pick a VC, it's a little hard, but recently I've started following Foundation Capitalist Ashu Garg a lot, right? And then his thought process around investing, you should only invest. You have the not the power, but you're in a position where you can influence how things will shape up in the next 10 years. So invest in category creating, category defining tech, right? Not in the incremental stuff, right? So that thinking I like, and hence I would say him. In India, I would say Sanjeev Bikhchandani. Though he's not very active right now, but like back in the day, I mean still active, but like he has a fund and there are people managing the fund. But I think Sanjeev Bikhchandani is invested in Zomato, Naukri,
Policy Bazaar.
I mean, Naukri the founder, Policy Bazaar, right? So him, I would say.
Actually, exactly same answers from
Same
me.
exactly.
Yeah,
you're making your cognitive load easier.
No. No, I actually genuinely think like he's one of the best investors in those days. I think investing in two great companies which have like really delivered
$10 billion
actual return.
outcomes.
Yes.
10 billion plus outcome in India are like very rare.
Yeah.
And
I think the other metric to calibrate is I think he invested like as a fund, though it was not a fund, 300 crores in that cohort.
right.
And that cohort today is valued at I think 33,000 crore or something.
Wow. Yeah. So I think sheer by numbers and like even from the impact perspective, number of companies which really generated and delivered return and exits, not just like on paper, I think he definitely stands by far ahead. Second, I think probably could be Kunal Behel as well. I think his portfolio is also done quite well. Globally, unfortunately, I don't follow too many VCs globally. So again, my answer would be similar. I think really admire Warren Buffett. The fact, I think I've read about him a lot. What I admire about him is he's able to take emotions out of his decision making of investing. I think I read somewhere that for him that that it's like a number and he wants to chase that number irrespective of how can he make it larger in the long period of time. And that takes away all the emotion out of it. That okay, what if you lose these many dollars? What can you do if you earn these many dollars? When you just think of it like a game, it is a number and you want to maximize it. Then you are able to take the most objective decision and take the entire emotion out of it. So that thought process I really like and admire him. But I don't follow US VC ecosystem as closely, as I focus more on Indian consumers.
Yeah. I think two people for me in India. One is Karthik Reddy from Bloom and other is Alok from Stellaris. I think both have been very helpful in my own journey in terms of connects. I think connect with especially, let's say LPs backing you in front of, let's say, global allocators. Globally, I would say Peter Thiel is my favorite because he's been contrarian and right.
Yeah. How much would you believe in the theory? I mean, he has a theory that you just back really good founders and let them do whatever they do.
I completely believe in that. So when anything, let's say, comes up in an IC and we said, we'll invest if these founders, let's say, change this. I said, we're going to be the last ones to advise them anything to change because I don't want them to change anything. If you're going to back them, let them evolve at their own pace. We don't want to cause any force factor of making their evolution faster or slower.
Yeah. How about you? Like, do you take a decision based on will the founder listen to you, or will he? I mean, listen is a second thing, but is he open to feedback? Is he or she open to feedback?
I think they should be open to at least hear a different perspective and still take their own decision.
Yeah.
So if a founder index too much on your decision, okay, I would look forward to your advice and then decide accordingly. That is not as much preferred, but I think so. Of course, we do believe in like founders should take their own decisions, take their own charter their own path, have their own learnings. But at the same time, I think there may be certain blind spots, and people should be open to at least hear from different perspectives and still decide like what they think is the best. So there at least when like while we know we can't change anything material to the outcome of the company or the success of the company, but at least we would still want to have a really good relationship with them so that you can have informal conversations with them and you can give them your candid point of view, and it is up to them how much do they want to give weightage to it, how do they calibrate it and take a final decision whatever they think is the best.
I think one thing and I would like to take both of your inputs on. One thing that I've learned is that which Indian ecosystem is very heavily focused on, and where US people are flexible is ownership. For example, you guys might like 15-20% ownership. Same with you. In US, what I've observed, even the biggest of the funds would like to be part of earlier extraordinary journeys, because they know that in some of the extraordinary journeys, even 3% or 5% ownership for a 300 mil fund, right? The outcome tomorrow can be Coinbase or Uber or recently MoveWorks. And I think in India, though we are expecting 5 or 10 billion outcomes in the next 10 years, but the ownership's criteria are still backward looking.
Yeah, so I think the reason probably is that India is very early in its
that's what I'm
venture
saying.
journey.
So though we are projecting $10 billion outcomes in the
So
next
we don't. I think none of us project or index on 10 billion outcome because they are very far rare and few.
Yeah.
Some will get created, but you can't take that in your model, right? So I think effectively it is a function of that. In US you might be okay taking 5% ownership because there is a possibility for the company to be $50 or $100 billion. There have been past examples of that, and hence people have started believing, okay, something like this can be created, and hence we should invest in it, right? I think once in India it starts happening that people are seeing more and more 5-10 billion plus companies, I think people would be okay. It's basically math. If your math doesn't work out at 5%, then people would hesitate in investing in it, because even if the company does well, which in current standards of India is, let's say if you're $1 or $2 billion, you might as a fund you might still not make significant needle moving money. Now over time there is a hope that this, as we get into more diverse businesses, more innovative solutions, as we start targeting global companies and start winning in global markets, maybe that needle will move up, that people are okay to see, okay, I'm indexing or benchmarking my portfolio on 2 billion, 3 billion, but maybe there is a potential for certain kind of companies to be 10 billion or plus. And there people might be okay taking lesser ownership.
Gaurav?
Yeah, so I think that I totally agree with that. So in US you have multiple 10 and $100 billion outcomes. So even a 2% ownership in that is significant, or 5% ownership in that is significant. In India, if you own a 5%, if you start with 5% of a company which will eventually become a unicorn, by the time you get your exit, it will be at 2%. So it'll be like 20 million return, right? For a company which went to unicorn and where you were one of the first investors. In US, that number could be 200 million, right? It could be a $10 billion outcome. So that is one difference that I totally agree with. The other, now things are of course changing, right? And alluding to my previous point of the balance, right? It is shifting in favor of the founders. The founders can command how much they want to raise, who do they want to raise from, and how much do they want to dilute, right? So, but unless we see more of $10 million outcomes, and the ones that we have also seen in India, by the time they went to $10 billion outcome, the first investors would have diluted 80% of the initial stake, right? So that also kind of plays out.
Gaurav, so what's the most fascinating startup story that you have heard, both from one within the portfolio and one outside the portfolio?
So if I share the one which is outside the portfolio, is, I would say, the founding journey of Slack, the way it is today, right? Everyone would have used it. Anybody who works in tech or startups would have used it. But the way it started was the founder, Steve Butterfield, if I remember right. So they were building a game called Glitch. And they had distributed teams. So for their internal communication, they had built this tool called Slack. And I think the full form is something like simple log of all conversations and knowledge, something like that. That's what Slack stands for. The game didn't go anywhere. Glitch. So they had to shut it down, I think in 2012 or 2013. And but this product was widely used internally, and then they thought of launching it publicly. They launched, I think, end of 2013 or somewhere around 2013, and within a year, it went to $1 billion valuation, less than a year, right? So that is one story, right? Which is, he was building a game, the game went nowhere, but what he built as an internal communication tool or for people to chat within the game, that came out of the company valued at 27 billion when Microsoft acquired them. So that is one from outside the portfolio. Within the portfolio, I would say Dozee, which is a healthcare services company. So they're building remote patient monitoring systems. So their story is very interesting on a couple of fronts. One is, the founder himself, right? So he I mean, he personifies grit and determination and what you can do, right? So he has shared this publicly, so I can share it here. So he lost one of his hands to a crocodile while trying to save his own dog, right? And while his hand was half chewed off, he drove the car to the nearest hospital, got himself admitted, called his friends, family, who were, right? So he is something, he operates at a different level. But even for the company Dozee, the product, the way it, I mean, he shares the story is, so they'd built this heartbeat monitoring device, right, which for humans. Uh, and they're still in prototype stage. And one day they're going out of the house and they had a pet dog. So the dog would chew everything, was young. So they hid the device under the mattress, right? And when they came back, the dog was sleeping on the mattress. And later on, when they checked the device, the dog's heartbeat was recorded, right? So then they realized, okay, this can go under a mattress and can get into like even sleep monitoring and remote patient monitoring in hospitals and things like that. So it was a chance discovery which like kind of led to a great outcome.
Yeah, very interesting.
Yeah.
This is the more interesting of the two stories.
Yeah, this is quite interesting.
Yeah.
Okay. Naman, what about you?
Yeah, for us, I think, like for me, I think couple of interesting stories that I've, so I run this program called Startup Navigator where I interact with founders just to help bridge the way investors think and the way founders think, since I've been on both the sides of the table. So in that program, I met a founder, and of course, people usually come when they're struggling to raise money to figure out what their story and pitch should be. So he was struggling to raise money. He was building something in the preventive health space. A lot of people have died, while building in that space. I have never seen a guy as passionate as him to solve this problem. And since they were bootstrapped because nobody was funding them, I got to know some time back that his co-founder, he has been working in a company, and like the way they are managing their funds is, he's the one guy is working and he's putting all whatever he's earning into the company to keep it running. And of course now they're doing relatively better, still not raised a proper round, but he has invested significant amount of money while working in a different company. I think that really talks about the passion and what people are willing to give up to continue to build. I think that seems quite fascinating to me. So that is one. In the portfolio, I think there is one interesting story of a pivot, effectively. When we invested in a company called Rupicard, they were trying to build a secured credit card earlier. And while in their journey, they tried to figure out some GTM hacks. So, as a secured credit card, they were trying to get users who typically don't get your regular credit card, and hence they had a lower CIBIL score, and they thought they'll start the journey by selling secured credit card. Along the journey, they started giving this communication. Okay, we'll help you improve your CIBIL score through this journey, and that value prop resonated with a lot of users very strongly, and people started paying itself for that product in itself, which was just a small GTM hack. And over time, now that has become their main product.
So back when I started in 2012, I could quit my job in 2012, and my co-founders Satyadeep and Saurabh, right? So I didn't have any money and I had burnt all my savings, and they were both pooling money from their jobs to keep me alive, right? And they joined full time after 1 year, and for another year they kept on pooling whatever of their savings were left to keep the company alive. So one interesting story from within the portfolio is of atomic work, right? If you know Vijay, his background, he comes from, let's say, a family of farmers, and he was raised by his aunt. He shared a story on a podcast as well, right? And like he studied at his aunt's home because the parents were farmers and they couldn't afford his schooling, and he then joined a normal engineering college, nothing fancy. And after engineering, he worked for a few companies, then started a company in 2012. Nobody was giving him funding till long point of time. I think 2016 is when breakout happened, when his company was acquired by Nutanix.
Yeah.
Right, for 60 million. And even after that, I think he's very relentless, so he didn't keep quiet, right? He served for 4-5 years at Nutanix. He built a $300 million business inside Nutanix. I think when he came out, he said, like, why can't I have the best of co-founders in the Indian ecosystem? So he got as co-founders Kiran and Parsu, who were like the founding team of Girish in Freshworks. And the best of Freshworks he got inside Atomic Work.
Yeah. Some of those hustle stories are like crazy. I mean, what you have done, like the story that you shared. Like we recently invested in a company, it's not announced yet. So, I mean, the reason you spend more time with founders is you get to know like such. Otherwise, the pitch presentation is, oh, this is my background, this is what I've done, this is. So they were sharing the story. When they started building initially, they were selling to some customers in India. It was not going well. And then randomly they got an inbound from US. So they spoke to the customer and the customer said, do you have this, this and this? They said, of course, we have everything. They said, okay, tomorrow I'll get my head of tech or head of IT. Can you demo it to him? And he said, sure, we'll demo it. And they had none of that. So they're pitching this like at around 9 p.m. in the night. The meeting was scheduled for next day. The whole night we coded, whole day we coded, built some basic features, and next day we demoed it. And then that's how we got their first customer in the US. Right?
Wow.
So these hustle stories are, really inspiring and incredible at times.
Yeah. One memorable lesson that any founder has taught you, Gaurav?
It is, somewhat related to what I already said, right? Which is about just grit, determination, perseverance, and hustle, right? If you are really passionate about something, just go all in for that, right? That is something that I've learned while interacting with all the founders, right? I mean, they don't care about really good founders and passionate founders don't care about billion-dollar outcomes. They just want to solve a problem and passionate about that. Don't care so much about money, about social life, everything, right? So if you're really passionate about something, go all in and enjoy that journey, right? That's something that I've learned through all the interactions. Not single lesson, but this is like one common thing that I could take out from all the founder interactions.
Naman?
I think one memorable lesson, I think there are many memorable lessons which are pointing towards the same thing, which is never say never kind of an attitude. I think a lot of time as investors, we box on into, this has not happened in the past, or, this is very difficult to build, or ye to nahi hoga.
Yeah.
Nobody has cracked it. And time and again, I think multiple founders have proved us wrong ki, even if we think this is not going to happen or very difficult to do it, they have somehow proved that, this can be done. So at least earlier I used to index more on, okay, this is not possible or this is very difficult to do. Now at least the lesson is, can you turn it around and think of it in a way that what if, this happens? Yeah. And, start thinking possibilities beyond that lens, that if this happens, then what all can be done. So at least I have stopped saying this can't be done or this will not happen. I think always be open for the possibilities.
That's something I definitely agree with, right? Because that is some sort of a limiting belief, and also like ties back to like pattern matching. If this has not happened in the past, most likely this will not happen. But you also need to understand we're in the business of investing in outliers, right? And hence you need to believe that, suppose in sector investing in the greatest outcome that has happened is a $1 billion outcome. And you're saying, oh, how can this company get to that? The biggest outcome in this sector is this, or this space is this. Then you're limiting yourself in terms of your thinking and like betting on outliers, right? So that I definitely agree with that. That don't think of whether it has happened in the past, and if it has happened, then that is the upper limit of where it can go.
Yeah, I have spoken to you at both of you at various points in time, right? So you had itch of starting on your own during your investor journey, and similarly you. So what has kept both of you in the game?
Oh, that itch keeps coming every now and then. You see a founder building something that you can relate to and say, oh, let me also do this, right? So, but jokes aside, when you come from operating background, right? I mean, at least that was my thought process initially. I'll spend some time in VC, get a broader perspective, build network, and then get back to building things, right? But if you think about what you want to do, right? Whether it is a job or a startup or investing, whatever it is, at the core, for me, like two things matter the most, right? One is the kind of work that you are doing. Are you enjoying that? Are you having fun in that? Are you learning every day? And second is the kind of people that you work with, right? And again, these two factors can like differ depending on the stage of your career. At least for now, these two things are the most important things for me. Right. So the first thing, like what I do, I mean, all of us here would agree that it is one of the best jobs, right? Not because you get to invest in startups, but because you get to see what is happening around, what new innovation is happening in consumer and enterprise, how AI is going to change the world and things like that, right? So you're at the cutting edge of, at least if you're not building, at least you're seeing how things are changing very fast in front of your eyes. So that keeps you going. And then you also meet very interesting, smart people. Your team is good. You work with founders who are really smart, very inspiring. So I think that keeps you going, right? So these are two things, like as long as you're doing that and you're having fun, sometimes you get that thought, but then what you're doing is equally inspiring, exciting, fun. So maybe because of that, that itch hasn't gotten to like an actual action. But the day I feel this job is boring, maybe that's when I'll start thinking about it seriously.
I think honestly, even when I came into VC, my thought process was similar. Okay, I'll work for a couple of years and then I'll go back to building. But I think during those time, I basically fell in love with the job as well. I really like meeting a lot of people, and I really like talking about business ideas and evaluating what can be done, what can't be done. I can do that all day long, and this job allows you to do that. That you can talk about businesses, different types of businesses with different people, and over time I started liking it, enjoying it, and hence like 6 years have gone by without even noticing it so far. To summarize, the way I say it is, you get 80% of the high, what you get of building, with 20% of the stress because you're not actually doing it. So it's in that way it all plays out well.
Win-win.
Yeah.
But I would love to ask a couple of questions, maybe. So one is, what do you miss about building or being in the operator role or being in the founder role earlier versus now?
I don't miss anything. I'm daily doing what I used to do as a founder. Go out.
20% of the stress.
I'm taking 100% of the stress. Yeah. Go out with an empty bag of money.
Come back with some money.
Come back with some money. Right. So that I do, and being part of the founder journey, like I don't miss that, like building products, but like building the fund. So right, our fund is also a product. Building the team in the fund. So that gives me all the high of a founder, and fundraising gives me all the stress of a founder.
So building a fund is like doing a startup, right? I mean, you have to raise funds, you have to invest, you have to manage teams, right? For me, I think I miss the kick of like doing new things every day and then having that quick feedback loop and figuring out, okay, this worked, this did not work. So that I think I miss a lot. And second is, I would say when you're here, you work closely with founders, right? But they're the ones who are like driving. You're sitting on the back seat. So you miss that, right? Ye to aise karna chahiye. Let me go and do that, right? So that bias for action is here, but like acting that and like whatever thoughts you have, like putting that into action in startup, I think that
you can't implement what
you think, right? I mean, at the end of the day, you discuss and debate with the founder, but decision is his or hers, right? So that is something that I miss.
I think one thing that I miss is while building, when you have a larger team, I think you have that lack of talking to a lot of people, working with a lot of people. Investing is usually a individual kind of a role, right? It's an IC role in some sense.
Yes.
Of course, you have teams, but your day-to-day work is more individual. You're not working with a team, leading a team, motivating a team, or going out with a larger team and having fun with them. So that's the one thing.
That I used to miss a lot earlier, right? Because the team was small, 3 partners and me, and all of them were fairly senior. And I'd worked in startups where like I would have been on the higher side of the average age group there. So you were working with like youngsters, some new thing is happening, some joke is being cracked, like people are pulling Jesus leg, right? So that fun, but again, over time you get used to the new setup as well.
Which one do you enjoy more?
Now the team is big, so I enjoy that.
It's a controversial question which you ask.
So I mean, it is at times like investing become bigger than an IC role becomes lonely at times, right? So you would want to have people around you that you can like talk to, crack jokes with and crib about things. When it's just there in Prime, you work there, so like everybody's like very friendly, right? And like very open culture.
One of the best team that you could have.
And very open culture. Yeah,
I think that is one, even for me, I think same as Prime, I think that is one of the reasons for me to stay in VC for so long is because of the people and culture at the fund. Because eventually you want to work at a place that you, or work with people that you really like interacting with, or want to work with. So I think that has increased my tenure as a VC as compared to what I
and now there's no going back.
Abhi to nahi, matlab it's not.
You still said, haven't said no. Abhi to nahi.
Matlab you have a lot of things to prove as a investor as well. Until you see ki no, I'm not fit for it, then you'll think about it. But VC is a very long game, so you're already in the midway. So
you've already given.
Either you turn back very early, or you probably go a long way and see ki, okay, either you're not made for it, or you've already made enough money to retire.
But when do you decide you're not made for it? Like at what point would you figure out that?
For me, this is end game. I have a dream of starting companies, but let's say with Neon's ownership of high ownership, and let's say incubating companies within Neon, let's say a cloud company.
For you have like been part of, you were running your own startup. Then you joined VC for a short while at Prime. Then you went back to MNC at AWS. So again, you were working with startups. And now you're doing a fund, which is also like a startup. So if you had to go back to one of these, or like pick amongst these, like which one would you?
Except Neon, otherwise you'll pick Neon anyways.
Except Neon, like which one would you go back to?
I would build, if I were not building Neon, I would start another company. That is for sure, because I like high bias for action and high ownership. So for me and all this journey, like I was a founder, so I didn't have a great exit, right? It was a small acquisition. So I was trying to acquire as much skill as possible before I start on my own. So I think when I joined VC, got like one thing I learned from Prime is like work with great people, right? And then you enjoy the journey. And the other thing which I had never seen was humongous scale. Like AWS is the largest possible SaaS company that can be built in the world. $100 billion of revenue, right? Possibly entire Amazon market cap of 1 or 2 trillion can be attributed to AWS. Amazon might be a minus on the market cap, but it can't get larger than this. And the lessons that I have to learn on enterprise sales, or what works in India and US, that was picked a specific role that I became like head of SaaS ecosystem for AWS in India, and the job was to go to market to these companies in the US, which I could use for my own portfolio. That how do I learn that? So I would say it was some sort of a vanvas before starting.
I think knowing both of you as well, I don't think any of us typically want to go into corporate. Either it will be investing or startups.
The corporate limits you. So I think you have you get told what to do. So you have to find your own creative fuel.
I go to some of these like events or demo days, and there you have to walk into a corporate office. Just the feel and the look of it is like.
Have you ever worked in the corporate? I have never worked in the corporate.
I'd worked with Nomura.
I've never worked in the corporate.
So that whole system of carrying a ID, swiping it, walking
ID
in,
and swiping,
like
that's
lift, going
the
up.
hardest part.
That gives me a BT.
The largest company I've ever worked was Flipkart in 2012. That's the largest company I've ever worked in.
Yeah, if you would have continued in Flipkart for the next 12 years, you would be retired.
Yeah.
Or you're still retired, I don't know.
How about you, Sid? Like between building a startup and building a fund, which is also like a startup, how are the two different?
So I think I started a fund. I gave a lot of thought on what to do next. I started a fund because I thought, like, being a founder, I have only so much ability to attract great founders, right? I could, let's say, get co-founders one level above myself, right? But being a fund allows me to tap into infinite potential. Let's say a few days ago, we reached out to Mohit Aaron that we want to invest in him. Mohit Aaron has built 2 decacons. He'll not take our money, but there is no harm in reaching out. One is Nutanix, other is Cohesity, right? But I would say the biggest joy I get is like being part of journeys like Atomic Work, right? Where the founders are like 10 notch above me. So there is no chance that I could have been a co-founder of Vijay. So this is the best best role that I can partner with him and see the journey and learnings from atomic work. So I think that's the high that I would not trade for being a pure founder again.
80% of the high.
Yeah.
I think now it is turning into Naman and Gaurav's podcast. than Mangeet's podcast. Cool.
Yeah, but I mean, investing looks easy till something in your portfolio starts breaking.
Yeah.
Otherwise, it's just investing
I mean,
and
let's not go there.
I think even when companies break, I just tell founders that which companies are fair, that if you start another company, at least I know you so well that I would want to be the first check, or you come to work at Neon.
What would you do differently now that this is the third fund? If you're starting a fund again, like how do you start it differently?
First is, in the first couple of funds, I relaxed as soon as the fundraising was done, right? So how to get it done, let me know, just invest. So I would not stop fundraising at all, right? I will always
Be on fundraising.
will be on the fundraise, because I know till we hit something like Mamarth, I would have always been on the road.
Yeah.
So I would keep on fundraising till that point in time, till it becomes inbound. Right, and I think we built our team quite later, because let's say only in this fund we could afford a decent management fee. In the first fund, I didn't take a management fee. In the second fund, I took the lowest possible management fee just to prove myself. Right, so I would have built, had not taken that decision, I would have built a team earlier. Having a team around is fantastic. For the first couple of funds, it was a solo player game, like just me and Nancy taking care of entire things on the podcast and outside, and I on the investing side.
I remember you were like making your own pitch decks and and sharing. Yeah.
Those were some of the terrible pitch decks. But thank you so much, Gaurav and Naman. I laughed a lot. This is one of the few podcasts, and you turned the table upside on me. So that was fun.